You are listening to ChartingWealth.com for Thursday, the 15th of December, 2016. Markets were down for the day, but we still have up candles on our two-day charts. We're still well above both the weekly and the two-day trend lines. What we basically have seen over the last day is some pairing off of the candle. So we have a larger wick than we otherwise would have had with the downward price movement down, total market down 0.91%. So moving close to 1% for the day. What do we see going on? Well, we've lost a little bit of upward momentum on our derivative oscillator, but again, we still have strong up movement. Now let's take a look at what happened intraday on the 4-hour chart. And we can see that at the end of the day, we saw a dropping off and we are getting close to a crossover going down. Has not happened yet, not confirmed until in the morning, depending on what the market does in the morning. If it pops up, then we will see that disappear. And in fact, maybe you have an entry point. Now, we've talked about when you jumped in, and hopefully you had been in this practice trade all the way back when we had the crossover going up. You will have done quite well. The low you could have gotten in was at 111.29. The high was 112.90. We had gotten as high as 114.61 over about a 3-day period. That is beautiful. So what do you do right now? Well, crossover, if indeed that does occur, means you get out. Now, you may have sold half your position or so. We told you be careful, always staying in anything during the Fed meeting that we warned you about in the comprehensive review back over the past weekend. Those of you who have not listened to that, go ahead and listen to it. You need to understand how to approach always big Fed meetings and such, and that is get out of the market or at least reduce your position, take your profit, and move away. And you could have gotten out of the market yesterday afternoon on Tuesday and done extremely well. The high, like we said, 114.61. If you would have jumped in using just our typical charting method, you could have gotten in as low as 111. So what? $2 to $3 in a 3-day period. That's a pretty darn good return. We're not even talking you being involved in options, just purchasing and getting out. Now, again, we're not a stock calling service. We're not talking about you doing this with your own money. We're talking about you doing this with a virtual trade, going to any of the online brokers, setting up a virtual trading account and practicing. When do you start using your own money? When you decide you're good enough, you're prescient enough at reading these stock charts, and you make your own decision. We don't get paid to do that. We're an education firm, not a stock calling service. Okay, now let's keep moving through these charts. We just were talking about the total market. Next, we're going to move to the S&P 500. What do we see going on there? You see a couple of additions to the charts. What have we done? We're always trying to improve things. What we did is we added basically vertical lines for when we see the crossover occurring. So the 2-day crossover going up occurred back on the 10th of November, and the weekly crossover occurred on the week ending, let's see, we'll take a look at that. On the week ending the 23rd, well, let's see, yeah, the week ending, the 25th of November. So what we've done, and there I go, actually, for those of you who are watching, I just moved my okay, putting it back. But what I've tried to do is go ahead and draw these verticals in so at least we get a feel for when the changeover occurred. Remember, the trend's always going to occur sooner on the smaller chart and then later on the bigger chart, almost always. Sometimes they can actually happen at the same time. You have a market crash or crazy exuberance, but that did not occur. And so we're well above on our S&P 500, the weekly, and the 2-day chart. 2-day chart's continuing to move up. Derivative oscillator did not lose any energy, even though it stayed the same over the last 2-day period from the 12th through the 14th, even though there was down movement of 0.83% over the course of Wednesday. So we still have a strong up moving market. Now let's look intraday, see what we see. And we are getting close to a crossover. Hasn't occurred. We're going to see how things happen over the course of the next week. Remember, the jumping in point was somewhere on the S&P 500, anywhere from a low of 121.50 to a high of 124.67. How high has the chart gotten since then? All the way up to 128.34, a low of 127.83. So you've done quite well. Even with the drop-off that occurred, if you were foolish enough to stay through the Fed meeting, which we never recommend, again, maybe you sold half your position. Again, practice these things. You don't ever take my word or anybody's word for anything. Practice. And that's why we talk about doing virtual trades. Even when you get good at this and you can time in and time out do the trades right and make money, you still want to practice because you want to get better. That's why we're always modifying our charts. We're trying things, coming up with new strategies, because the market itself does change. If you were doing right now what you were doing 10 years ago, probably wouldn't be working. So we're always looking, the market's always modifying. Don't forget, we've got all that quant trading and everything else out there that affects the market, and sophistication of investors, institutional funds coming in, all sorts of stuff. So you got to always be experimenting. Folks, that's what makes this fun. So again, not only should you be, experimenting, doing all these things, you should be enjoying this. This should be 10 minutes of joy every day, not drudgery, not work. It is both work, but it ought to be fun too. It ought to be both of those things. So let's keep going. We're going to go back to our 2-day chart. Going to take a look at the Qs. Now remember, the Qs is we don't have a weekly trend yet. We are waiting for the Qs to develop a weekly trend. It seems to be getting close. Not crossed over yet, maybe by the end of the week, if it does cross over going up. Then, as long as our 2-day chart continues in its up position, which it is up strong, then we won't have the schizophrenia of a down weekly chart and an up 2-day chart. And then we can start drawing crossover points, trend lines. And remember, we're trend following. So we want to move in the direction of the biggest chart, because we know, all things being equal, the market tends to move in the direction of the biggest chart. We keep this simple. Those of you who are looking, I had somebody the other day email me and say, hey, I listened to your Heiken Ashi training about the candlesticks. How do I get more in-depth material? And I was like, well, you can go search it out on the web, but we try to give you everything you need. Everything you need. What you need to do is you need to practice. You need to practice, and you need to modify your approaches when things don't work. If things are working, you're doing the right thing. If things are not working, you're doing the wrong, and you need to find another approach. So practice. Fill out your daily market worksheets every day. Listen to us for 10 minutes. Do what you're supposed to do, and things will go well for you. So again, no trading that we're doing right now on the Qs until it meets our parameters. Okay, now lastly, we're going to go to our 2-day chart. We're going to take a look at gold. Gold was down 1.47% for the day. Boom. Big down moves in gold. Derivative oscillator, though, if you look at the 2-day chart, actually lost downward energy, even though gold was strong down. We're below the weekly and below the 2-day trend line. If we look intraday on gold, what do we see going on? Well, the 4-hour chart is just now barely crossing over, going down. If you want to practice on gold and do an inverse gold trade, look at how gold opens in the morning. If it does confirm this crossover, then you can sure practice gold going down. The only problem I have with gold is this 4-hour chart has stopped working for us. But remember, all things being equal, the market tends to move in the direction of the biggest chart. That is the weekly and the 2-day, both of them down hard. So if you do have a crossover, play it. Just do an inverse trade if it crosses over and kicks in as we do things, and see if it indeed works. The problem you're battling against is gold really wants to hold the line somewhere around 110. So we'll see. Maybe it is going to make new lows. So again, Practice, watch, experiment. That's what it's all about. Folks, that's where we are as we end the day on Wednesday the 14th and go into Thursday the 15th of December. Can you believe Christmas is less than 10 days away? Oh my gosh. God bless you. Hope you're doing well. We love to hear from you. Want to help us out? Go to Charting Wealth, the website, and subscribe. We'll be happy to send you all the trainings, all the work that we do on a daily basis when the markets are open. Also, if you really want to help us out, go to iTunes, subscribe to our podcast. You guys have made us as high as number 6 in the world with stock market podcasts. And give us a 5-star rating. Say something nice about us. Follow us on Facebook, Twitter, Instagram, YouTube, and at YouTube, subscribe to us there. That's one place we upload a lot of stuff immediately. So God bless you. Take care from chartingwealth.com.